Young Ma, thanks for being with us today. Let's start out with your big picture perspective on all the macro factors in play. What are you watching?
Well, the Fed certainly pointed a picture of stagflation and a hard landing, and that's really what's still rattling the markets, and the markets are trying to come to terms with. The Fed came out with projections of higher unemployment, higher interest rates, lower growth, and very difficult for the markets to digest. We actually think that we'll see something more akin to a soft landing, and that we're probably seeing peak hawkishness out of the Fed. We do expect there's going to be a correction in some areas, still some estimate cuts to come in the next quarter or two, but we actually think those stabilize and we're on the path to a soft landing. So I think when we're thinking about the divergence in those market expectations, it's probably right now pretty stark between the people who think there's going to be a hard landing and subscribe to the Fed's projections and those who think the markets and economy can stabilize going forward.
Yeah, why are you so optimistic about a soft landing, and how do you see the tech sector playing through that?
Well, we think the underpinnings of a soft landing are really based on a stable labor market. We've seen that already, even though growth has slowed down, that labor market remains quite healthy, and spending, despite the retail sales numbers that were soft for 1 month, overall spending remains quite healthy as well. So we do think the elements are in place for a soft landing, even though we're going to correct in certain areas. And what does that mean for the tech sector? It means we still want to look for areas of opportunity as we get estimate cuts, as there's some inventory correction that happens over the next few months and even quarter or two. We think these actually present buying opportunities rather than a spiral downward that's going to lead to a more severe outcome. So, we do think there's still a correction that's happening in terms of inventories, in terms of an adjustment to slower growth, but we definitely see those as opportunities coming up.
Young, I think it's interesting. I just got off of a conversation with Shantanu Narayan of Adobe, and we see that stock doing so well this morning, and really in a way that not a lot of people expected, because marketing-related software spending, one would expect, would be weak in this environment, given what we've seen happen in digital advertising, but they were strong. Does that say anything about subscription models overall and the position of enterprise software, or do you think this is just Adobe doing particularly well?
I think that's a little bit hard to parse out. Certainly, Adobe seems to be doing well in terms of executing on its business plan. So certainly kudos to that company for presenting a pretty strong quarter here. But I do think overall this points to some divergences that are happening in the macro environment and with spending overall. There are some companies that are still doing quite well. We've seen that not just Adobe, but we saw that recently in Oracle as well, and Cisco, Broadcom. Part of it's about end markets, but part of it's about execution as well. So, I do think that if we take the picture that we're seeing, yes, some areas are struggling, but it's not an environment and an expectation where the economy looks like it's going to sink and all ships are going to go down with it.
Young, I'd love to hear a little bit more about your thoughts about the semiconductor inventory correction and how that is going to be changing things this quarter. I mean, it's so interesting looking back at how much has changed from a year ago, both to the negative and also in terms of the positive of resolving some of those supply chain issues.
Well, we still think there's a ways to go with the inventory correction. I think the question, and certainly some end markets have already signaled much steeper corrections, some that are more tied to consumer goods. There probably are still some areas, even in some of the stronger markets, such as automotive, industrial, data centers, which may announce some softness going forward. But again, we still think those are buying opportunities. We don't think that's going to persist for multiple quarters. We think it's a correction that's already well underway in some areas, and that will be relatively mild in other areas.